Are you worried about a recession? Is the stock market crashing around your ears? Are you selling everything? I don't think it's that bad. Let's get into what an actual recession is, shall we? Welcome to Hi-Tech Rednek Money, where we help you navigate an ever-changing financial world. So what is a recession? A recession is a significant, widespread, and prolonged downturn in economic activity. If you actually go to the Investopedia article, there are a few things to note. A lot of times when you see on TV, they're talking about a market crash and calling it a recession, which a market crash is actually categorizes a downturn of over 20%. And given the aggressive decline into the red, these behaviors typically precede a recession. So while a market downturn of over 20% is not technically a recession, a lot of times it leads to an economic recession. And if it's bad enough, can lead to an economic depression. So if we look at the real gross domestic product that is the entire goods and services produced in the country adjusted for annual inflation, we will see that while our growth has not went negative, it is leveling off. And if we zoom in on 2007 to 2009, a little too far, we'll see that before the actual recession happened, we had volatility or instability in the GDP. And we were actually in a recession before the fall in GDP. If we look at these dates, quarter four, 2007, quarter one, 2008, go back to the SPY on those dates. So quarter four would start right around October, right here. And we see we actually put in an all-time high right before everything fell. Now, I want to talk about something that gets mentioned a few times in trading or any chart analysis, and it's the concept of uh, M's and W's. So, when we take this area, if you look at it, you see an M. Now, when you get to the bottom of the recession, and actually even here, you see M's, and down here, you see a W. Typically, when you're looking at a chart of consumer behavior or really any technical analysis of any chart, uh, you're familiar with the concept of double tops and double bottoms. And what you get in a downtrend, or the beginning of a downtrend, or especially during a downtrend, you tend to see lots of M's. And that is because buying pressure is trying to raise price action, but selling pressure, especially at a key level, comes and pushes the price back down. When that buying pressure is exhausted, or well, when the selling pressure is exhausted, you get to the bottom of the trend, and then buying pressure comes in and gets tested a couple of times, and you get double bottoms, and then you start seeing W's. And in an uptrend, you tend to see W's. You start seeing W's, a double bottom. That means typically a reversal. It's not 100%. Nothing in trading or anytime you're examining human behavior, there are no 100% guarantees. But typically, I would say 75-80% of the time, when you see a W, it's going to be the bottom of the range. So then if we look, the next slowdown, you get a W, and it continues on. This is the economic crisis or downturn, 2016 to 2018 almost. But now if we move on to the pandemic, see a lot more M's before your downturn. So you got W's coming up, W, and then an M. And then you get, if I lowered the time frame for that, go back. If I lower the time frame, that section during the pandemic, all of these retests during the fall would actually look like an M. But anyway, I say all that to come to where we are today. W's, W's, W, M, M, W, M, W, W, M. So it's hard to see, but we are starting to post M's, which means that selling pressure is coming in. People are getting scared and they are selling assets. And we know from news that a lot of assets are being sold. Now, I don't want to go over it completely again, but anytime you have a lot of selling pressure and prices on assets are going down and inflation is going up, so the value of money is going down, basically, in relation to the goods it buys, then there's a good chance that you're going into recession. And all of the factors that we would measure a recession are going up. And unfortunately, usually you don't know you're in a recession until you are in recovery because of the nature of GDP reports and their lagging manner. They're only put out once per quarter. And so if you go back here, they're only put out once per quarter. And the most recent GDP report is Q4 of 2023. Or no, Q1 of 2024. So if we were tapering off and this was falling, a negative GDP report, which we're definitely flattening out, then it would be 4 months before we know. So to have 2 consecutive quarters of negative GDP growth would take 8 months to show up. And in 8 months, you would be midway through a recession. And the length of most recessions goes anywhere from a year to 2.5 years. If it went far enough down to become a depression, we really only have 1 or maybe 2 depressions that we could look at the length of The Great Depression lasted for 12 years. We had another major economic recession around 2008, and it lasted a little over 2.5 years, almost three, depending on which report you would say. Okay, so started in 2007, really recovered end of 2008. We'd call it 2009, really. So by the time you get the criteria for a recession, you are actually 8 months into, if not a year into, a recession. So waiting on somebody to declare it a recession is not a good idea. If you want some tips for what to do in a market crash or a recession, I have videos linked in the cards up top, and then also will probably be in the cards at the end of the video. Here on the website, we have the recession ready mindset, which was what my last video was about. And here's an article with the high points from that. There's also a guide for trading in recession that is identifying, well, first diversification, and then also identifying asset classes, which ones are traditionally defensive and which ones aren't. But with that, I just wanted to answer a question. So whether we're going into a recession or not, it's hard to tell until we're in it. The thing that'll happen first is probably going to be a market crash. Um, but either way, it always pays to be smart with your money. So the recession ready mindset will really help you out no matter whether we're going into a recession or not. And with that, subscribe, ring the bell, like, do all that stuff. Quick channel update. I'm still working on the forums and everything I talked about in the last video. Hopefully, I'll have them all up for the next video. Thanks for watching.